All right, Thomas, let's get right into the investment ideas and fundamentals and how you're seeing the world right now. With that said, I want to first ask, you were at a precious metals conference last week, which I actually haven't even heard of a precious metals conference going on at all, period. I mean, is there a lot of interest? Is this the first in a few years? Bring us up to date.
Yeah, that's a good sign, right? When no one talks about the conferences, someone had just posted a picture from another conference, not the one I was at. It was the Denver Gold Show. Basically, like, the lobby of the place was completely empty. I'm like, love it. Like, that's the kind of energy you need if you're in a value investor. But I was at the Beaver Creek Precious Metal Summit, and that is a phenomenal conference. But it was great from a perspective of understanding where the opportunity is. I had a good chance to talk to, talk to some, great veterans in the industry. But I've never seen it easier than it is right now because, simply put, when you're not in a screaming bull market and you're setting up for that opportunity, the investable opportunities are actually quite limited. Like, because there's only a few companies that have access to cash, have great resources, and it makes your life dead simple. Actually, it's actually a, like, from a stock picker's perspective, like, and I always think of it relative to these passive ETFs. Again, we run an active ETF. I think passive ETFs, half the time, especially in sector orientations, they own a lot of junk. And I want to be owning the quality name. So from a stock picking perspective, phenomenal time, because I know the GDX, these are like the prolific ETFs. They're going to own a lot of companies that are going to have trouble getting financing, that don't have the great resources. So from our perspective, it's a very exciting time to be planting your flag. We're not there yet, right? Planting our flag, waiting for the Fed pause. And the nice thing about precious metals, we did a great did a great interview just a little while back, just with West Ridley Gold, and they were saying nice historical perspective. But the last three times the Fed paused, on average, gold went up 100%.
Really?
So yeah, so so three periods, varying returns, but gold after the pause went up the last three times the pause happened. So it was it's kind of a nice setup here, assuming a pause, right? Again, there's a
Right.
fly in the ointment here, right? As long as inflation doesn't reaccelerate, you don't get, like, this is where we sit right now. And I think there's a lot more to come down the pipe in terms of feeling what the Fed has done, what Bank of Canada has done. We are going to see inflation cool. There's no question about that. What we can't control is oil. That for us, that's the commodity side of the equation. So that for me is very exciting, because, listen, I want to own the stuff that goes up, and that's,
Yeah.
that to me is exciting, and I think gold is a nice setup here.
So it's interesting though, and just so we're all on the same page, I mean, the Canadian CPI data came in higher than expected yesterday. Interestingly, UK CPI came in a little bit lighter versus expectations. I mean, that's the UK, but nonetheless, we're looking at this in some ways from a global banking perspective, central bankers, that is. But talk to me a little bit more. I'm not aware necessarily of the fundamentals as to why, when the Fed pauses, gold would go up. Normally, you
Yes.
think if they're, yeah, tell me.
Yeah, the main reason is you're not seeing real yields go higher, right? Like, that's the crux of it, right? You're getting, like, real yields have stabilized, and that kind of is like, because right now the biggest headwind to gold, full stop, is real yields, right? But I would say this, which is very, I'll bring the graph next time, but I think this is a powerful graph. If you look at the historical correlations, dollar, real yields, etc., and say, okay, like, where should gold trade? It should actually be a lot lower than it is right now. And that actually is something very interesting. Gold is held up significantly in the face of these very strong headwinds, right? And the real question is, well, why has that happened? The key reason has been buying from the emerging markets. That has been a huge differentiator here for gold, and it's a very unique time. Gold's held in now. What hasn't held in is gold equities, right? So that is where the opportunity is, right? So if I was a buyer, I'd be a much more active buyer in gold equities than physical gold for sure. And obviously the same holds true for silver as well.
But you're not there yet, is it right? Am I right in terms of
Well,
buying the
we're at that
gold equities, or
point right now where we think it's based out, where you can plant your flag, so to speak,
okay?
because you're not going to get a chance when they move really quickly, and that's just kind of
Okay,
investor psychology.
we'll take a quick break. We'll be right back.